Good morning, everybody. Hey, welcome to Wednesday, the 15th of January. Hard to believe we're halfway through this month already. Glad you are joining us today. We've got a few things to talk about, a few more earnings coming out as we get ready to talk with Dave here in just a moment. I'm hoping that you'll find some things out there that we talk about, some good pertinent information. So hang tight. We'll be with you in just a moment.
Time to check in on your money. See how Wall Street's treating your 401k and IRA this morning. Well, not too bad. I just lost myself. There. Lost my headphones for a second. Let's head downstairs, downtown actually, and check out the offices of Statler Financial Services. Phillip Statler standing by as we start getting into the meat of the financial part of earnings season. Phillip, we actually have something concrete to talk about for a change, don't we?
We do. We've got some more earnings coming through, which is a good thing to talk about. Yesterday was kind of a mixed bag. I'm sure you'll recap that in a little bit, but people want to know why. And so one of the things, the headlines I saw this morning is that some of the traders have dug down into this China deal, and they're a little disappointed. And so that's reflected, I think, in some profit taking.
I think that's probably the case, kind of what I'm reading too. Step number one, you and I have talked about this for quite a while. We ended up settling the China trade deal by basically agreeing to go back to where we started. Plus, there was one story that came out. Some of the tariffs aren't going to come off until we get past the election, which is kind of disconcerting as well. And it kind of meant a lot of traders said, let's just lock in the money we've made and see what happens, right?
Yeah, I think so. I think they're taking this opportunity to definitely take some profits off the table, given that we're bumping up against all-time highs.
Absolutely. We're talking about, wasn't a sell-off by any measure yesterday. The Dow closed up 32 points. That's 0.11%, which I think gives us a new record close again. NASDAQ was off by 22. Standard & Poor's was off by a little under 5, so it was by no means a panic sell-off by any measure, but it was kind of a mixed bag day, as you said. Start out the government data dump this morning. We got the producer price index, how much it costs the factories to make money, and that was basically, we were talking, I don't know whether it's good news or bad news, 0.1% increase in the producer price index. 12-month number is up to 1.3% producer inflation. I would normally call that good news, but the way Wall Street works, expectations being what they are, I don't know what to think. Do you?
No, not really. I mean, you think that means, you and I would think, well, that's a good thing, right? Because prices are not going up that fast. It's half of what was expected. They expected the PPI to go up 0.2%. But I will just tell you that as I look at the futures, since that number's come out, the futures have continued to decline into the red.
That's kind of what I'm reacting to. The fact of the matter is, and it's one of the unpleasant facts of life, a little bit of inflation is a good thing on a lot of different levels. Among other things, it means government borrowing today means we're actually getting cheap money in the out years when we actually have to pay it off. Lower inflation rates mean not as much manageability in terms of profits for the big companies. So that target of 2% inflation from the Fed is actually good economic targeting. And we've just been having an absolute beast of a time getting to it, especially on the producer side of the economy.
Well, that's true. We continue to battle, and the Fed would really like to see that number up better than what it is. And you and I agree that we need some inflation to keep things rolling in the right direction.
And we're making it on the consumer side. We actually topped over 2% on the consumer report the other day, but the producer prices are just going nowhere. The other government report we got out was the Empire State Business Index. You and I have kind of giggled about the fact that nobody knows for sure how they calculate those indexes. The one thing I do know is that the Empire State Index, if it's above 0, it's good news. And if it's going up, it's even better news. It's up by about 1%. Rating in January is 4.8 for the New York sector of the business community. That's up from 3 point something from last month. So we'll call that as a good data point and let it drop at that, right?
Yeah, it is a good data point, going up because it had been falling the last few months. So that's definitely a good sign.
Good news. The financials are reporting in earnest this week, and we had a few of them yesterday, and we got a few more today. Neither one of us could find the specific numbers, but PNC Bank Corp is one of the big ones, not one of the monsters, but it is one of the big ones. I do know they beat on their quarterly report on both profits and on earnings. And on revenue. You've got some of the really big ones like Goldman Sachs, which I gather was a bit of a disappointment.
Well, there's kind of two numbers we have to look at when it comes to Goldman Sachs. When we look at their GAAP earnings, which is what they get audited on, they did miss. They missed by probably about 50 some cents. And the reason for that, Dave, is they have this big pending litigation settlement or some fines coming in. So they've set aside some of that money for that. Now they say if it hadn't been for that, they would have beat expectations. Revenue was ahead of what was expected. They're seeing record consumer and wealth management revenue come pouring in, as well as record assets under management. So some good numbers there. Just this set aside for this fine coming up hurt their financials, and they're trading down today about 1.5%.
I noticed they're up on my loser list. To clarify for folks who don't recognize the slang terms, GAAP is generally accepted accounting principles, and it means that there are certain ways that all companies need to report using a level playing field, and that GAAP number needs to include set-asides for big legal settlements and the like, and that's right. I forgot Goldman Sachs is about to lose a ton of cash in fines, aren't they?
Yeah, they are. Something to do with Malaysia investments they had. On the other side, we have Bank of America reported. They beat by 6 cents a share. Revenue was above expectations. They had a 25% increase in fixed income, currency, and commodities revenue, which helped them quite a bit. Now, they're still trading down just a tad today, and I think that's probably because they were right up against their 52-week high, and so we probably see just a tad of profit taking there.
That's always the peril when we start getting into these really nosebleed levels on the indexes. Even a good news event out of a company could make people say, well, let's just take the money while we got it. You were talking about Goldman Sachs set a new record in terms of assets under management. I didn't see the specifics, but I did see the top line on BlackRock. They set a new record on assets under management as well, didn't they?
Yeah, they did. They really had a pretty good quarter. They beat by well over 50 cents a share. Revenue was well above what was forecasted, and you're right. They saw a big increase in their exchange traded funds. They created some exchange traded funds and called manufacturing, and so that's been a big boost to them as well. They're trading down a little bit. Again, I think it's profit taking because they're bumping up against their 52-week high, and so they're down 0.06% right now.
Okay. Any other financials that meet household name status before we get to some interesting retail news?
No, I don't have any other financials that I can see right now.
All righty. We're getting a lot of them, so we both scan through the morning and compare notes as to who found what. Target released an earnings warning. We don't have their quarterly report out, but all it takes is a warning, and that ain't helping them one tiny little bit this morning, is it?
No, it's not. Target came out and reported on their holiday sales. Holiday sales were up 1.4%, and Target is calling this very disappointing. They said they had some key challenges in merchandise categories. They did reaffirm, though, their fourth quarter guidance in terms of what their earnings and revenue should be. We're just seeing they're disappointed in their sales number, which is affecting their stock price this morning. They're down a little over 6.5%.
I was going to say, boy, howdy, is it affecting their stock price number. I came up with a note earlier that just the Association of Discounted Retailers, the news from Target is also affecting Walmart's stock negatively this morning. And I'll bet if we delve down farther, find a bunch of other retailers that are getting adventurous on the internet. Folks expected revenue from their online sales to go up. They're all trading down this morning off of that fact, aren't they?
Yeah, I think so. I mean, one bad number and the whole sector starts to feel it.
Pretty much. Resetting the table this morning, yesterday was, like we said, a mixed bag. Dow up by a tinge, NASDAQ and the Standard & Poor's off by a tinge. We're all kind of writing that off to profit-taking more than anything else, absent other reasonings. 45 minutes before we open this morning, Philip, can we turn that corner today, or are we going to continue mixing the bag up?
We're going to continue to mix it up a little bit. Actually, we're continuing to go all down right now. They're all red. We've got everything not coming up roses. Everything's kind of red right now. We got the Dow down 78 points. You got S&P 500 down almost 7 points, and the NASDAQ down a little over 12 points. So everything is heading south right now. We've got crude oil down about 1/3% to 58.06 a barrel, and we've got gold and silver up a little bit. Silver's actually up 0.75%. Gold is up about 0.5%. So some good things there when we look at the markets there. So, the commodities okay. Gold's going the way. I mean, the silver, crude oil is going the way we want it to go. The other ones, they're coming off their highs.
Those changes on the indexes, too, are just since we started talking, because my delayed quote had at least a mixed bag, some green, some red. It looks to be like the producer price index report did not impress investors much, unless we were wondering what it was going to be interpreted as, right?
Exactly. Yeah, definitely not. Because when that came out, it's when things started really sliding.
Yeah, one more thing underscoring our assumption that we're looking at flight to safety and simply profit-taking. Treasury notes, I noticed that I'm down about 6 basis points this morning on the yield, meaning that we're buying a few more bonds and parking some money until we figure out which way things are going. Overseas markets are reflecting our mixed bag and confused picture from yesterday. Asian markets generally off by a bit at the close. European markets are mixed this morning halfway through their trading day. Phillip, advice is always needed. If we can't figure out what's going on, safety is always a good thing. How do I find you to make my retirement accounts a little safer?
And give us a call at 863-382-0037 to schedule their financial x-ray review, where we dig deep to determine how much risk you have in your current portfolio and to make sure that it lines up with your risk tolerance, so that when another devastating crash comes, you are not alarmed. And then catch us on our website at statlerfinancial.com and join us every weekend for the Statler Financial radio show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on your sister station, News Talk 730 a.m.
Which streams all the time, too, at newstalk730am.com. And we stream us here, and we'll be here again tomorrow morning as well on Light FM.
Have a great day. I'll talk to you tomorrow.
Thanks, Phillip. It's 105.7 Light FM and Statler Financial Services' own Phillip Statler. Remember that.
Hey, folks, again, I want to thank you for joining us today. I hope you got something out of that. If you are 5 years out from retirement or already retired, I can't stress enough how important it is to understand what you're holding in your portfolio and how much risk is there. That's why I designed the Financial X-Ray Review, to determine what your risk looks like compared to your risk tolerance number. Give us a call. Let us go through that process with you. 863-382-0037. Until tomorrow, have a great day.